Oh my god, the markets are a trap right now, right? It's a whole lot of mess. We don't know what's going on. In fact, actually, I do have a clue of what's going on. And that is, the end of the year, we are expecting a huge rally to the upside. But instead, what we got was a lots and lots of tax loss harvesting as well as tax gains harvesting, because next year they have been talking about raising the tax rate, right? So a lot of people have been selling to secure those gains before being taxed super heavily, and people who are going to be affected most by these kind of tax laws will be the ultra rich, the institutions, and hence they are kind of rebalancing their entire portfolio, selling what's not needed, alright, selling those major winners and shaving some profits, right, to return some value to their shareholders, to make their holdings a little less volatile before all the tax bracket comes kicking in. So this is an effort, in a sense, a concentrated sell-off of all the institutions, right? And that's what is coming in, to deflate as well as push prices down on a lot of the growth companies, right? So companies like what I'm holding, like Teladoc, Okay, RKT has been holding up pretty okay. NIO has been getting better as well. As long as you're not holding the big three like Apple, Facebook, Microsoft, Google, alright, those four are the ones that are kind of holding up the entire S&P 500 right now. The rest, if you're invested in anything that's more hype, more growth, right, in the first half of 2021, you would have been down a whole lot, and that's insane, alright? You look at the entire market over here, right? It's Dow's down, Nasdaq's down, alright? Everything's down. Look at this horrible red, right? Bam, everything to the downside. And S&P down also as well, right? Everything is down massively. Okay, and swing trading wise, we have been stopped out of quite a few trades as well. And if you look at my recent newsletter, right, my newsletter post, I have written a whole ass article about it. This is one article that I'm currently writing, alright? So you're gonna be a little bit more, looking forward to that, right? So I've been reading a few articles, like for example this one, right? If you haven't checked out my news article yet, I do recommend you to go and check out my Substack, where I post many of my greatest picks out there, right? My thoughts, my ideas on the markets, as well as my long-term, short-term swing trade plays, all in my newsletter. So go ahead and subscribe to that, alright, if you're interested in knowing my thoughts, alright? Appreciate that, alright? As we are there, right, smash the thumbs up button down in the descriptions below. So I was talking about, having a shorter time frame, right? When we are swing trading, right, 1 to 3 days, last time previously when the market was in the bull market, alright, and that's where we can use swing trading in a very effective ways, trading the momentum, right, getting the momentum plays and getting those gains, right, to average down and dollar cost average into our long-term high conviction plays, alright, because face it, right, swing trading, unless you are a really good trader, like extremely good trader, and being able to manage large sums of money, right, like maybe 100,000, swing trading $100,000, alright, I guarantee you it's not so easy. Swing trading for me, comfortable level, maximum of $20,000. That's a comfortable amount. Any more than that and I'll get anxiety, right? Because you never know, market can get whipsawed, right? If I'm swing trading, for example, with $100,000, right? A whipsaw like last few weeks, right? Alright, would have probably taken a huge chunk out of your swing trading gains, maybe 20%, right, of the entire portfolio, and that's quite difficult for a lot of people to stomach. And hence, I definitely, my own restructuring of my portfolio will be around 20% of swing trade plays. However, right, in my article over here, I talked about, why we as swing traders have to adapt to the current market condition, alright, and that's what makes us different and have an edge over trading bots, right, alright, that is what makes us more profitable, because now we can see that the entire market is shifting over to a very whipsaw environment, right? One day it's going to be green, one day it's going to be next, it's not really following any certain pattern, it's just going to be up, down, alright, you do not know where it's going to go, and as traders, that's the worst kind of environment, right? You just buy here, get stopped out, then it goes back up again, you don't know how to swing trade this. Hence, I'm suggesting a more of a position trade, right? Alright, so regarding time frames, I talked about, position trading, especially in a very whipsawy market, alright? I encourage you to read this entire article itself because I do have a lot of golden nuggets there. And hence, position trading is more of holding a company in short for 1 to 2 months to 3 months. So now you're looking at more of the weekly time frame instead of the daily time frame, because daily time frame is still too volatile, in our sense. right now, we're going to look at more of the larger picture so that we don't get stopped out immediately and we hold good companies, alright, to position trade to the next year or so. So hold for a couple months. This fits well to a lifestyle that's not obsessed with the markets, alright, and that's why we are doing swing trading, we're not doing day trading, right, because we have our own lives outside of, trading itself, and this is just another way to make us more money. So hence, this is what we're going to do, right? So position trading is what I'm recommending, alright, for my own self, right, to do, alright, in this kind of market, alright, finding more swing trade plays. And hence, my content will now pivot towards a little bit more of fundamental analysis as well, besides technical analysis. Because if I'm holding a company, right, and swing trading it for 1 to 3 days, 4 days, alright, maximum 1 week, fundamentals is not going to be much of a, factor, right? Unless it's earnings, a major catalyst event is coming. But fundamentals doesn't really matter in 1 to 3 days or a week. But if I'm holding a position to months and months, or maybe up to 6 months, alright, then fundamentals do have some say in it, because they will probably go through 1 or 2 earnings call. There's a higher chance of a catalyst coming out during that period. So again, doing your fundamental analysis will increase your chances of, having a more successful swing trade play. And in this kind of environment, you want to look for the good companies, right, who will bounce back from this volatile environment and will stay afloat, alright, even when people start to mass sell. Institutions will still keep those good companies, right, a certain percentage of it in their portfolio. So now I've talked about all this, right? It's very important for you guys. I know I'm rambling a little bit, but I'm talking all of this is very important for you guys to understand, the thesis and why am I changing from this and that, alright, so that you understand how swing traders think itself. It's not that mechanicky, alright, and it's about how you adapt. And when we go back into the bull market again, definitely we'll be doing more shorter term plays again, getting those quick 20-30%, alright, gains and getting out, alright, and using those gains to dollar cost average into your high conviction plays. And when you find those 100 baggers, right, 100 times stock, right, in the future, and those are the ones that you'll be able to average in, alright, and keep time in the market, and hence, getting a lot of value out of that, and your 100,000, 100x will be a few $1,000,000, right? And that's how you generate massive wealth in the market, alright? So that is a more sustainable way, in my opinion, to do it, okay? Instead of, swing trading the entire account, it's way too stressful. Personally, for me, right? Okay, maybe some of you can do it, then kudos to you. You can use my resources as a guide. So, first company let's talk about for this week, right? Alright, this week, first company we can talk about is semiconductor play, alright? And this company is MXL, right? This is Max Linear Solutions, right? It's a tech company, semiconductor company, and this company definitely have a quite a little bit of a uptrend right here, right? And what do I like about this chart is that, it is going up, alright? Good news, massive upside. Okay, you can see from this area over here, right? Come look at my face, right? This area over here, there is massive, right? Institutional buying over here, which is seen by these green bars, right? Actually, a chart tells us, where the big fish are buying. Big fishes are buying around $55 to $65, right? And again, more people are buying over here, but people are starting to feel a little bit at the top. Maybe some people start to take some profits down here, but you can see that instead of collapsing, right? So everybody just sold out, okay, for a quick swing trade back to the $53. People are actually still buying, right? People are still buying at this level, $65, showing a strong consolidation of people willing to buy at the $66 range. And hence, after it dropping back down to the $66, right, you could actually play this as a swing trade, buying here, alright, and selling higher, okay, or buying here, alright, and setting a stop loss near the $49 level, because, alright, very, very low chance, alright, that, if this bulls over here hold, right, people who are buying at this level hold, right, speaking in layman's terms, alright, it is very unlikely that the price will go to $54, right, and you will get stopped out. So again, the stop loss will be pretty huge for this one because it is a position trade of more than 6 months, alright, a couple of months swing trade for us to hit a price target. So again, $54 will be one of the stop loss that I'll be making, because if the buyers over here dumps, alright, and it goes back down to these prices, then, I would see that, there's a lot of selling pressure right there, and there's a high chance, that it may deflate back to the low 39s, and that's where our stop loss needs to be at. Alright, secondly, alright, another option you can do, you can sell put options at this area, right, to, in case, people are sell put options to get some premiums, alright, so that you are able to collect some premiums when volatility is high, alright. I'll sell premiums at a strike price near $55. Again, same concept, alright, as long as the price stays above $55 by the expiration date, you'll be able to collect the premiums on this company, and that is what we want to do, alright, in this kind of environment. Collect some premiums, alright, play some swing trade stocks, alright, and that is my strategy, alright, for this coming week for MXL, right? This company, pretty decent stop loss over here. Profit taking area, where's the profit taking area? Profit taking area, definitely, we will be selling, alright, maybe one leg up. So again, $55 to $67, maybe another $10 upwards, right? So again, if you look at the charts over here, MXL, alright, at the almost high weekly, right? It's almost high here, right? You can see that a lot of buying pressure, then it goes back to half, buying pressure goes back to half. High chance it might actually even touch $62. But again, this area is where I want to buy in. Go down to the 1 day time frame, daily charts, alright, daily charts over here, you can see that a lot of buying pressure. Alright, my stop loss probably near the $49, alright, and my profit taking area will be one leg up from here, $51 to $67. That's how much? 51 to 67. Anyone? Alright, it's around $11, right? 51 to 67. I mean $16, right? $16, okay, that's around $16 of profits. Alright, my profit taking area would be somewhere around another $16 or $20 around here. Okay, that is a good risk to reward. Again, I'm looking at this as a position trade, alright, and this is a high probability trade, alright, to trade in for this coming week. So yeah, that is for MXR. I think MXR is a good company, alright. There's basically a lot of buying pressure in this company, alright. There's a lot of investment ideas, alright. Gross margins are doing pretty well, sales are there, alright. Although that its price to book ratio is a little bit high, but its price to sales is pretty cheap as well. And right now, again, the market is gravitating towards a more value kind of play, value companies, alright. They are not looking for those high probability companies, right? They're more looking for these lower valuation companies with somewhat of a good growth that is not super massively hampered by, inflationary fears. And again, you can see that definitely there is a lot of gross margins over here. Sales are up, alright, and it's definitely earning money, right? It is earnings quarter over quarter is over 100%, and it's definitely turning a profit. So this is the companies that we want to swing trade. Next company, right, it is a play on this, right? After looking at the major markets, right, the sectors itself. Okay, I'm looking at the discretionary consumer staples. Staples, right, are the consumer defensive goods, right? Those are the goods that have been holding strong, right, in this entire sell-off. And you can see that, he has been the one that's bouncing up the furthest, right, on Friday, right, 1.24%. And again, if the market's on a risk-off mode, consumer staples will be doing very, very well. And this next company I'm going to talk about is a play on the consumer staples industry. And consumer staples industry, this company is none other than Unify, alright, United Natural Foods company. And this company, we swing trade it once before, alright, but we didn't catch this next run up. Okay, we actually caught this from $37 all the way to $50. Huge, massive, over 30% run, alright. Was pretty pleased about that. But after it deflated, we actually didn't catch this one over here because we were a little bit more, a little bit more suspicious. We didn't feel that it's going to come back up again. I didn't feel that it was going to come back up again, alright. But again, market reversed, came back up again, hit this top over here, right? And you can see that there's a lot of selling pressure trying to sell it back down, but it is holding strong in this area as seen by this big green candle over here at $48. Similar thesis to the previous company. Alright, looking at a 1 week chart, okay, you can see that it is doing pretty okay, right? You can look at it over here. Oh, where my thing going? Okay, over here you can see that there is a lot of selling off, up here, then boom. Okay, from here onwards, this is the turning point, right? From this weekly time frame itself. Okay, turning point, change of trend, alright, respecting this moving average very strongly. Alright, and again, always a very strong bullish sentiment over here, buying it up. And because this company is actually doing pretty well, its price to sales ratio is 11, but however, although it's very cheap, it's because it is a very slow or slim margin kind of company where it generates a lot of revenue, but it spends also a lot in its cost of goods. So this is a very low margin company, hence a very, very small, right, and a compact price to sales ratio. So looking at the 1 day time frame, right, 1 day time frame over here, Yep, okay, same thing as well. Okay, you could definitely, okay, I see big bulls buying over here at $36. The trade will be looking like something like this, right? Over here. Okay, definitely be buying somewhere right now. Okay, stop loss will be near the, alright, $11 stop loss near the lows over here, which is a very low probability. And again, price target, okay, will be around $72 around here, which I think it will be a good leg up to the upside. As well as you can actually just hit a trailing stop loss, right? Because the trail can be $11 trailing stop loss and the profit is unlimited, because when it goes up, alright, and when it waves down again, alright, a lot of bullish sentiment coming in, alright, is the stop loss will just be going up again as seen, right? So this is again, for those of the new people, it's called a trailing stop loss, alright, of $10. Okay, trailing stop loss of $10. Why $10? Okay, you can see the stop over here. Yes, okay, $11, so around $10 plus. Alright, that's the trailing stop loss. Okay, upside is unlimited upside because we just want to, you know, buy in this area, alright, and hope that the fundamentals, alright, supports this move upwards along with its technicals as well as its movement indicators. Alright, and that's it for today's video, everyone. Okay, we have these two main companies that we are going to be swing trading this week. Alright, you can play options on them by selling options, alright, at a very conservative strike price near the stop loss area to get some premiums. Alright, those of you who are not familiar with options, please do not try this. Alright, go and learn about the basics of options first. Alright, before trying this out. Otherwise, just stick to securities. Just buy the stock itself, buy around this area, set stop loss here, alright, and set a trailing stop loss so that your profit is unlimited upside. Okay, and that's it for today's video, everyone. I would say trade safe, alright? Okay, don't do more of a short-term trading in this period because unless you are playing those very penny companies, right? Very hype companies, those one-day massive runner dumping kind, day trading kind. Swing trading wise, very difficult to swing trade in this environment, honestly. And you just have to adapt, right? Adopt a more longer time frame, alright? Wait it out, right? Have some beer, you know, have some fun, you know, have a good Christmas, alright? Celebrating, you know, get some gifts for your friends, get some gifts for your family, alright? Prepare some things, and you know, and have some fun, alright? Don't be so stressed about the markets, right? Because again, any growth companies out there are getting massacred. Okay, my holdings are getting massacred, basically, but I am not, you know, phased at all because again, the road to 100 bagger, right, to a long-term investment growth, it takes some time, right? It takes 5 years, 10 years, alright, and it's a long-term investment for your future, right? So you shouldn't get shaken out. If you are shaken out, that means your conviction is not as strong as you thought it was, and again, it's time to revisit the fundamentals, go look at it again. Are you sure this is going to be a good company, the best company you have chosen, alright? So if you have randomly chosen some random companies, then again, you might want to rethink those decisions, right? Okay, you might want to find a good technical analysis standpoint to sell at a certain resistant area, alright, and move that capital, right, to somewhere else that you have more high conviction. Okay, so if again, you have no conviction in any of your holdings, long-term holdings, or just buying it based on people's hearsay, this is not swing trading, then, you know, you better start doing some research this holidays, right, to start to accumulate positions on positions you'd like. And meanwhile, I'll be sharing a lot of my long-term investment trades here, long-term investment thesis here, alright, constantly researching up new companies, new stocks, right, that have potential for the upside, alright, and you can have a better insight about what you are getting into and do your own further research and hence, you know, find your own conviction, right? Because I may like a company, you may not like a company, right? Then that's fine. And there's many ways to go to a 100 bagger. Alright, I'll be coming up with more values like this, value informed stock picks like this one again, and I hope you guys have a wonderful day, and I'll see you again in the next video, everyone. Stock Estate out.